The best small account options trading strategies. My name is David Jaffe from beststockstrategy.com, and in this video I'm going to teach you the best strategies that you can use with a small account. A small account is something that is below $10,000 or $15,000. I would characterize anything below $15,000 as a relatively small account. So the first most important strategy is to limit your information that you receive. A lot of people, when they place trades, they'll go to seekingalpha.com and they'll read articles, but the reality is that they're essentially just looking for articles that support their position. They're looking for confirmation bias and affirmation that the position that they entered was actually worthwhile. In my opinion, this is just a waste of time. This is going to get you stressed out, and I don't even watch the news or read any articles on my positions. So you want to limit the amount of information, because in reality it's going to cost you money and it's going to cost you time, and it's just going to be a distraction. The second thing that you should do with an account size that's below $15,000 is craft out your watch list. You should only trade at a maximum 2 securities. And because something like Amazon has a lot of buying power reduction because it's a $2,000 stock, you should trade something like Facebook, which trades at about $175 as of September 2018. And you should also trade something like PayPal, which is an industry leader, which is trading for around $90 a share. Or if you don't want to trade PayPal, or if for some reason you don't believe in it, you can trade something like a Facebook or a Raytheon, which is RTN, which trades for around $200 a share, or you can trade Goldman Sachs, which trades for around $230 a share. So something like, choose, you can even trade one stock. If you just wanted to trade Facebook and you wanted to get comfortable with it and watch it, that's completely fine. I think that a lot of people make mistakes by taking on too much responsibility and they trade too many underlyings. So remember, a maximum of 2 securities. And I only have trades on at 5 securities at all time. Sometimes I have, generally 5. I have Facebook, Amazon, Boeing, Lockheed Martin, and sometimes I have Goldman, a gaming stock like ATVI or TTWO, and sometimes I have PayPal. But the only ones that I always have positions on are Facebook, Amazon, Boeing, and Lockheed Martin. That's 4 securities. It's not even 5. So if you have something that's below $15,000, there's no need for you to have more than 2 securities. The next thing you should do, the best strategy, so remember, the first strategy is limit your information. The second strategy is to not trade too many underlines. The third strategy is make sure that you get comfortable with the trading range of these stocks. So let's say you trade Facebook, you'll know that right now, as of September 2018, it's generally trading between 170 and around 182. So what you would do is you would get comfortable, and then once you know that it's trading at the low end of its range, you would then trade and sell puts on that option in order to minimize your risk and maximize your probability of profit. The fourth strategy, the third one, is getting comfortable with the trading range. The fourth strategy is get comfortable by trading naked options. As I've said in numerous other videos, and I know that a lot of other people are going to disagree with me, I believe that trading naked options over vertical credit spreads are far superior. The people who tell you that trading naked options is like picking up nickels in front of a bulldozer, with our strategies, we are very big on risk mitigation. So the reason why selling naked options is way better than going long stock, and also way better than vertical credit spreads, is naked options allow you to maximize your credit received, so you're not spending money on a throwaway option and you're not buying a lower price put. The second reason is it inherently limits you from trading too many contracts. I can tell you that one of the biggest mistakes I see is people trade verticals, and because there's not a substantial buying power reduction, they trade way too many contracts. When you sell naked options, you don't have to fight that inherent greed that most human beings have. Instead, when you sell naked options, it limits your buying power, so you're completely free from trading too many contracts, because it won't allow you to trade too many contracts. And the third reason why naked options are better is that if in the 5% of the cases we have to manage a position because it gets challenged, naked options are far easier to manage and roll that position than a vertical option, because when you roll a vertical credit spread, you still have to buy an overpriced option as insurance that you're essentially throwing away. So you have to get comfortable with vertical options. The fifth strategy is just making sure that you are extremely disciplined so you don't enter trades when you shouldn't. So for example, the reason why when Facebook fell in July 2018 that I didn't lose any money in is that when Facebook, a month prior to its fall, it essentially went up from $180 to $218. It did not retrace any of those gains or give me an entry point. As a result, I had no positions on in Facebook when it went from 180 to 218. Now, yes, I always have positions on in Facebook. So my positions in Facebook had a strike price from when it was trading below $180, and the strike price that I had chosen was like $165 and below. So when Facebook was all the way at 218, I was showing massive gains on my strike prices of 150, 155, and 160. And when it fell to 175, I took a little loss because it got closer to that strike price. But then the next week, as the volatility decreased and I opened up new trades and things stabilized, I ended up making from those new trades. Whereas if I had chased Facebook, and let's say I had sold a put at a strike price of 210 when Facebook was at 218, I would have shown a $35 loss, and I would have had to manage that position and extend out the duration on that for another 6 months. So that was a very long-winded explanation, but the point that I'm telling you is you have to be extremely disciplined in entering your positions. If you know that its trading range of a specific stock like Facebook is 170 to 180, and then it blows past 180 and it starts trading up every single day, just like Facebook did in June and July of 2018, you just let it go. And you have your existing positions on with a strike price of like 160, 165, and then you just wait for those to expire, or you simply close it out. The name of the game to make money is you have to be extremely disciplined, and you have to ignore all the misinformation out there. There is tons of information out there, and 99.9% of it is worthless. So again, my name is David Jaffe. These have been the 5 trading strategies for small accounts. I definitely believe that with a small account, you should target making anywhere from like 35 to 50% a year. It's definitely doable. You do have to be a little bit more disciplined. I would not recommend trading something like Amazon, although the only recommendation that I would make if you do have an affinity for trading something like Amazon is you can use a vertical credit spread for a stock that's like over $500, simply because the buying power reduction on a stock that's over $300 to $500 is so large that you can spread off some of that buying power reduction by buying a lower price put. You can go to beststockstrategy.com, enter in your email, and receive $400 worth of free trading, free training. Selling options and learning how to make money is not complicated. I went to an Ivy League university. I worked on Wall Street as an investment banker for 5 years because I'm fanatical and OCD about constant improvement. So there's no shortcut. Like, I put in the work. Trade Alerts product, you can go to beststockstrategy.com and look at our membership program. If you have any questions, let me know. Please like, share, comment, and subscribe to this video and subscribe to this channel. If you have any questions, leave a comment below and I will answer everything. And once again, this is David Jaffe, and I appreciate you and thank you for your time.